Welcome back to The Pulse. Let's get into some business news now. Zeda says its car rental unit was cruising over the reporting period, helped by an increase in corporate business and high travel demand. A car rental boosted the lion's share of the business, generating 52.1% of the profits. A revenue rose 12.4% to 9.1 billion rand, with operating profit up 22.8%. Profits at the company jumped by 30% at 742 million rand. We're now joined by Zeda Group CEO Ramasela Ganda on the company's annual results. Ramasela, this is of course the first annual results since unbundling from Barlow World. How has the year been for the company and which segments performed at their best?
Thank you and good evening, Mutel. It has been a very tough year. I mean, the results doesn't show that it has been a tough year. It started very well, with the outlook of international travel coming to our shore, and really excited about corporate saying now this work from home business, we need to relook at it. So we saw a lot of activity. But however, as you can imagine, the disposable income was impacted significantly with the interest rate and high inflation environment, and that affected our used car business, especially when we start seeing new vehicles coming on board. So really that has been one area that we saw as a significant impact. But the business, remained resilient in many aspects with leasing business. One of the key things that we say is our growth pillar was on the leasing business, on corporate. Corporate SA have really invested into this leasing business, so we've seen a lot of growth in our leasing and corporate. Greater Africa as well on the leasing business has done exceptionally well. At the beginning of last year, just before or when we went for our unbundling, we looked at heavy commercial, last mile and long haul as another growth pillar. And really from the long haul point of view, we really have made great strides. As you can see, our heavy commercial unit, just from a unit point of view, we grew by 44%. So that has been quite a great journey for us, that all segments, including a very challenged used car margin, which used car business remained resilient and delivered to this 9.1 billion with very good return at the end of the financial year.
Ramasela, in May, when you reported on your results, then the main target was to pay off some of those obligations you still had with Barlow World. Is that something you were able to achieve before the year end?
We definitely did. If there's one thing that didn't make us sleep was that debt was high, the interest rate on that debt was quite high. And with the rising interest rate, there's one debt that was just affecting our cost of doing business, and we needed to get out of that debt, and we've really achieved that. We are out of that debt. We're sitting in a position where our debt has been now restructured. We've got good interest rate on our debt, and our debt is part of our business, so we know that, we can manage our debt very well. But the challenge was that debt was more, expensive. And yes, that was one thing that we're very happy to get out of.
Well, the group owns car rental, leasing and sales businesses like Avis and Budget Rental. Are corporate clients back fully in terms of orders, or is that segment still being balanced out by the leisure rentals that are coming from tourists?
Look, corporate is very robust. It's even better than what we've seen pre-COVID level. We are seeing a lot of good activity that is coming from there. And interesting, we've seen, some of the public sector projects that really boosted our revenue in this period. Tourism is very big. One thing that we took note of is the disposable income of, local domestic travelers. There, the growth was really subdued. And we don't expect, exceptional growth coming out of that business while we're still living under this pressure times. But we look at subscription, one of the key projects that we have on a short term and the long term business now with what we've introduced with iLease to really help consumers with regard to mobility access, that even if you cannot, commit yourself for a very long period in getting the car or in getting into the short term rental, you need the subscription. Where we see the subscription work very well is, for those business people that live in the coastal and work in Gauteng, we're seeing a lot of them commuting and coming to 3 days a week in Johannesburg, and they've gone for the subscription product, and for us that is a big win of a subscription offering.
Definitely working out for you there in terms of the smaller vehicles, but looking at other commercial players in the trucking business, are you still looking as good there given that business confidence in the country is not doing so well?
Until there's a lot of activity in the road of South Africa, unfortunately. Not as desired in a bigger scheme of the economy that we would love to have, not the road as big, but that has worked in our favor, I must say. The growth that we saw on the long haul heavy commercial, it has been, such a good business activity. But for the country, I think it is still very important that we've got a real infrastructure that works, because we still believe that there's a room for heavy commercial and there's a place for rail and there's a place for last mile. And we're playing in those two last options. And we have seen them really growing despite what corporate, outlook look like and corporate activity look like. South African corporate is very resilient even in tough period.
Let's talk about Transnet. I mean, you have a fleet of more than 230,000 cars in terms of Avis and more with the rest of the business. Are you affected at all by the logistics failures? I'm thinking trying to get parts for some of these cars. Is that something that has hit the business yet?
And it does hit us somewhat indirectly, but what it causes. Sometimes it takes long for the vehicle to reach you, because in the time of the rail, now you've got how many trucks that you need to bring the vehicles here. But I think our OEMs have really managed this logistic process very well. They've worked very well in making sure with the trucking business, low bid that are on our road, to make sure that we're not impacted that much. Parts has not. I mean, there was only one or two OEM at the beginning of the year that really struggled with OEM. So the impact of it has not filtered in a way that has significantly impacted us. I mean, we come in from a period where we couldn't even have a vehicle. So we see this period as a significant improvement from where we're coming from. So this has been a great year from a supply point of view compared to the last 2 years.
And what are vehicle sellers telling you in terms of the market right now? We do have a consumer that's quite under pressure, elevated interest rates, paying back some of these vehicle loans as well. Is your particular selling business, that particular segment, still working out, given that some of the consumers are defaulting on repayments?
Look, the good thing about us with regard to car sale is that, we sell cash on delivery. So that is a big one. Okay, the bank will be financing it, but that obligation and responsibility doesn't rest with us. We did see a significant decline in margin. I mean, 5% decline in margin was quite significant, and we have seen that. But when you look at what is happening, is that because we've got a good product that comes from our car rental and our leasing business, and we call it a good product because it's a vehicle that get to be maintained and serviced. We're very diligent into making sure that our vehicle get to be maintained and serviced. And before we defleet our vehicle from operation into a car sale, it goes through a thorough inspection to make sure that we've got a quality vehicle. And most traders and dealers knows that. And, most of the traders and dealers buy Zeda car. So that is really one of the biggest things that has worked, that when all else goes down and you're only left with just a few bucks to buy, then most traders will go and buy the Zeda, because then they buy a good quality vehicle and they don't have comebacks from their customers. So that has been one of the big things from us. And because we don't carry any debtors in our book on a car sale, we have not been confronted with defaulters. Where we have been seeing defaulters, and not as aggressive as actually now. I mean, during the COVID period, we did have some, liquidation few in the leasing business, but not in the current year.
And you operate in 11 African countries, of course. We do know the South African situation. How is the rest of the Africa business doing?
Most of our Africa business have done and are doing very well. They've got different level of challenges. I mean, grain imports is the biggest challenge in some of the countries in our region. The one that is really tough to operate in at the current moment is Ghana. Ghana is, activity level is looking great. We're seeing a lot of orders on the leasing business coming with Ghana. But obviously the macro issues are still a big challenges. We're looking at access to funding. Liquidity is just the biggest challenge that we're confronted with from Ghana. But when you look at Namibia, very solid, everything works. Botswana, very solid. The Southern Africa as one area that, just looks more like South Africa.
Well, reading some of these results earlier on, Ramasela, I picked up something quite interesting. You've increased the number of electric vehicles in your fleet. Is this because of client demand for such vehicles, or the company is moving ahead of the climate targets to be less carbon emitting?
When you look at the leasing business, and one of the things about our vision and strategy is about a tailor-made solution. We own the leasing business. We only buy the vehicle that our customers require. And for us, as we continuously engage about our strategy on ESG and their strategy on ESG, that's where we find each other as to what they require. So from a leasing business, we give advice and we take you through the total cost of usership. But what remains important is that the customer will decide which vehicle they want. And that for us is the big differentiator that, when it comes to car rental business where we have hybrid car, that's when we decide which vehicle comes and we order the vehicle that makes sense to the market and to the demand and really taking the environment into consideration. And in that space, we will be, putting in, EVs in the next future, especially on the luxury side of a vehicle when we're talking about the chauffeur drive. That area is where we believe that it belongs there and we will be able to see benefit coming out of it. Just as a test, when we give, the rental is one of the key areas to market a product into the industry. So when you really want your car to be known, and every OEM knows that if you give it to Zeda, you will have good coverage of your product.
And just one last question before I let you go, Ramasela. Looking at all the economic indicators, what kind of 2024 are you expecting for the business, given that we have this below 1% growth?
A tough one, not different from this year. I think at least this year we had the first quarter looking much better between October and December. So we are experiencing it already in this 2 months in the new year. So it's still going to remain tough. Interest rates still tough. Used car, just because of disposable income, it's still going to be very difficult, and we are going to see some decline in that business. Corporate SA, I think corporate, especially SA, have done a lot and continue to do a lot as to how do we make our country viable and how do we grow the economy. And I think working together with different players in the industries, different industries, we will then, as corporate SA, fight for this country and make sure that, our country works. The interesting thing about next year is in almost all regions that we operate in, it's the election year. And that by itself calls for a different way where government looks at things differently. And I believe that, there will be some decision that will be made on the base on just the election years. So that will be something to look forward to in the next coming months for many of our regions. And we, looking at them and as to say, what do we need to do to gear us up and what will be happening and what decisions will the politician be taking.
All right, thank you very much for joining us. Zeda Group CEO Ramasela Ganda, they're talking about the owner of Avis and Budget Rentals.